Market Report, coming to you on Tuesday morning, November 6th, about an hour before the open. And it looks like there's a buy setup brewing for a possible year-end rally, but I suspect a false spike likely first in either direction. Yesterday was a mixed session with the Nas down and the S&P up, leaving a narrow range 7-day, an NR 7-day. This is simply the narrowest range in 7 trading days. It's truly a sign of the times when its 26-point S&P range is the narrowest range in 7 sessions. Anyway, these contractions in volatility are typically followed by an expansion in vol within the next few sessions. The presumption is we'll likely see another NR 7-day today with a tight, choppy trading range in front of the election. That said, tonight could be a wild pajama trade in the futures on the results of the election with an expected Democratic win in the House. It'll truly be algos and Dr. Denton's. My expectation was a low for this week to begin with the Gann cycle, the panic cycle ending, but that carries through the end of the week. So you never know. We could still see a scary plunge with a higher low before a year-end rally starts. Following Wednesday's momentum gap right here, you can see that it was followed by a stealth little breakout over a 3-point declining trend line on this hourly S&P. Markets like to play out in threes, and going into the 29th, we wrote that the market was setting up for a rally attempt on this 3 to 4 drives to a low. And there's a little fakey here, a little hook. After these 3 drives, the market actually flushed out, went lower, leaving a large range bottoming tail. This is an important level. This line here around 2650 was the top, which is the top of this hourly bottoming tail. So any scary decline that we get on a possible move below 2700-ish here, and then offsetting this gap, could see a accelerated momentum down to 2650, which I think would be a buy, at least on the first time down, with a stop. So there's still risk of a plunge down to 2750-ish or into the gap at 2665, 2680. If 2710 breaks. There is a consistent 2-year cycle in the market that does suggest a low. Remember, there was a low in early November on the Trump victory, a low in October 2014, and early November 2012 was a low that perpetuated the breakout over the 2007 bull market top and a multi-year advance into May 2015. How the market reacts at this possible cycle turning point will tell us much about the nature of the big picture trend if a year-end rally does indeed play out. Following some kind of a low, then it will be revealing if such a rally finds a lower high in the indices going into the turn of the year. That would be another notch excuse me, in the bear's belt. Remember, 2 years ago with the Trump victory, the futures were down 100 points overnight initially. The trend was up then. While the trend is suspect now, in my work it actually shows that the likelihood of a bear market starting on October 3rd. So it would be interesting if we got a mirror image of foldback with a potential up spike on the election results now that is faded. If we get a sell-off on the election results, it could get scary below 2700, as I said, but that could elicit follow-through down to the 2655 to 65 level. Looking at the hourly chart here shows this level, the 2650 level here, and all the way into this 2665 to 2685 gap, which you can see was probed here on this first pullback on the hourlies, this 1, 2, 3 pullback pattern on the hourlies. Now, however, there is the idea of a hourly head and shoulders top. So this is the setup going into the election. You've got an hourly bottoming tail, break above little 3-point trend line for an hourly rule of four breakout, a momentum gap. But we also have this hourly potential head and shoulders top. So we're going to get a resolution here, it looks like, at least in the short term, as to which direction is going to play out. And it would not surprise me if we see a false spike either down first into this level or even up towards the 200 period moving average on the hourly. Um, if we get a move above this potential right shoulder here, that'll trigger what I call a Blade Runner setup. And it's worth noting because fast moves typically are derived from false moves. So a move above, or false pattern. So if this a move above this potential right shoulder here would negate this pattern, suggesting it's a false pattern and perpetuating a possible fast move all the way up to the 2800s level, which of course is where the breakdown started in earnest on the dailies. So this is something to watch here, and at the same time, converting this right shoulder and following through to convert this hourly little topping tail here also suggests further prices. But if the trend is down, it should be a false spike that gives the sellers the opportunity to sell strength. Remember, on the Gann decennial cycle from 2008, there was a false up spike on the Obama election, and then you went back down on that decennial cycle from 2008. There was a little W bottom on October 10th and October 27th, followed by an undercut low into the crash on November 21st. From there, a 20% rally played out into year end, but even then, the bear was not finished, with a final coup de grace coming from that January pivot high down into early March, of course, which undercut the November 21st low. It's kind of interesting that that undercut of the November 2008 low into March, early March '09, was around 75 S&P points, and now from the initial high in August at I think it was 2782, we had around a 70 to 75 point throw over into the all-time record high at 2941 on late September 21st it was. So as above, so below. We may have a mirror image playing out of the pattern of the November March pattern low in '08, '09, and now a similar pattern, a false late stage false breakout in August, September this year. So the bottom line is a decline below 2707 to 2700 could see accelerated momentum, but as long as 2665 to 2550, right in here, as long as that level holds, the idea of a year-end rally could play out. It's interesting, on that decennial cycle we actually got a 20% rally. So if we get a false spike down first and a scary plunge that offsets this these levels here, it's important to remember that the closing weekly low for the S&P for the year is actually 2588, and of course the low for 2018 is 2532. So those can't be ruled out if things get out of hand and you break this support level here. That said, Apple, which we were short and flagged a second mouse, gets the cheese pattern. I'll show you what I mean. Let's go to a let's go to an Apple briefly. It looks like I've been knocked off. So hopefully this came through. If not, we'll repeat the video. Good luck out there trading today. Speak to you later.